11:70 a.m. It's Sunday night in the Caribbean, man. Hubert McIntosh is a member of the Society for Financial Awareness, and he's the man.
Financial literacy provided by Hubert McIntosh,
CPA.
Financial literacy. Control your financial status.
Here's your host, Hubert McIntosh, CPA.
Good evening, good Sunday evening to you in South Florida, the Bahamas, the Caribbean, and around the entire world. Thank you for joining us this evening. This is Hubert McIntosh, your CPA and a member of SOFA. I want to thank JP and CR for giving us that brilliant introduction. Every weekend, every Sunday night, they're on 8 to 9. We are on 9 to 10. And CR is a professional. You know, on this program, I always recommend you to use professional. And you cannot get a better one, real estate professional CR. So all of your real estate needs, your questions, your concerns, he can help you with that, okay? They are on every Sunday night on WVS 1170 from 8 to 9. We come along behind them bringing financial literacy. Remember, I shared with you 4 years ago, there was a statistics done by FINRA that 74% of Americans were financially illiterate. So you can check yourself. Do you think that number is the same? Has it gone down or has it increased? Well, I'd venture to tell you, as we deal with this daily in our office, talking to people about their finances, whether it's going to be taxes, college education, college funding, mortgages, financial illiteracy, I would venture that it's 80%. And that is a sad statistic. But I've joined with SOFA, the Society for Financial Awareness. SOFA mission is to help eradicate financial illiteracy in America and around the world, one community at a time. And I've started with this community. So we are going to be able to go against that statistics, whereas for the listeners that we are not going to fall into that 74% or that 80% financially illiterate. Remember, we are on Sunday nights, 9 to 10. So we're on 1 hour, but you have 24/7 access to us. Yes, you have 24/7 access. You can call us directly, 754-366-7311. 754-366-7311. We're in the studio, 954-792-1170. 954-792-1170. We welcome your call, your feedback, your comments, whatever is on your mind in the financial world. Tonight, we're going to continue in taxes. We're going to continue talking about taxes. But to give you the other medium that you have to reach us, remember the website, financialliteracy.info. financialliteracy.info, and you go to the website. We have media pages. It can take you straight to Facebook. We'd appreciate you liking the page. Share us with your friends. Don't keep us a secret. Okay? And you still have time. To share, because we still have 54 minutes. We're going to be with you tonight. And the topic is very interesting. We're talking about taxes. And remember what I always told you. From the inception of this program, we started January 1st, 2017. And we've been going strong with you guys. And we have listeners who have been with us from the beginning, from day one. We want to thank those listeners. We have listeners who have just joined us because other people have told them about us. So we thank you. Whether you're a 1 week listener or you are a 15-month listener, we thank each and every one of you. And we hope that whatever we provide will bring some enlightenment to you in the financial world. Tonight we're going to continue with taxes. So in the past 3-4 weeks, we have been talking about taxes. We spoke about the current tax law. We talk about the new tax law that was changed December 20th. We talk about the differences. We talk about the differences in personal exemption. We mentioned that there's personal exemption for 2017. Personal exemption right now, it's $4,050 for each person. And an example of that, mom and dad with 2 kids, that's 4 personal exemption. Each person is a personal exemption valued at $4,050 for deduction. That is one of the changes in the tax law. That's going away in 2018. You're not going to have that in 2018. And so that will be gone for 8 years. It comes back 2025. Okay, so keep in mind the tax law that just passed. Everything in it is sunset. It's a 8-year. It's an 8-year tax reform. You know, some people are saying it's permanent. No, there's no law. There's no law that's permanent. Remember that. Whether it's a tax law or whatever law. Anytime you hear someone says a law is permanent, that is crap. That's just false information. No tax law is permanent. They may plan or they hope that it's permanent. But remember, every time there's a change of government, Congress changes, or the Senate, Congress changes, the House changes, the Senate changes. The laws that were previously on the books, those laws can be reversed. So there's no law that that's permanent. So keep that in mind. But this particular one, this tax law that was changed December 20 in 2017, which starts January 1, 2018, that is for 8 years. And that is what it says. The law was passed for 8 years. But if Congress changes, right now Congress is controlled by the Republicans. If Congress changes where it's controlled by the Democrat, then they have the option to keep it or the option to change it. So there's no such thing as permanency, okay? So let's keep that in mind. So we're just going to talk about what's happening right now. We're going to focus on what's going to happen in 2018, because who knows, it can change for 2019, because November this year is election, is a midterm election, and you never know how those things going to play out. So we don't know what's that going to be. So we are going to just focus on 2018. So as I said, the personal exemption is gone. It's gone for 2018, does not exist. But to compensate for that, standard deduction. Right now, standard deduction that you have, and some of this, we're just going through some reviews, giving you some reviews of what we shared over the past 3-4 weeks. The current standard deduction for married filing jointly is $12,700. That goes to $24,000 in 2018. Head of household. Head of household is an individual, female or a male that has a child. You have to have a child or a dependent to make you qualify for head of household. So just because you have a household and you're paying the bills as a single person, that doesn't make you head of household. So I want to clarify that, because sometimes people will call and they'll ask us, why am I not the head of household? I am the head of. Yeah, you're the head of your household. But in terms of the IRS, you're not the head of the household unless you have a dependent. So keep that in mind. Okay? So for head of household, the standard deduction is $9,350. That goes to $18,000 for 2018. And then the next one, single. This year, single for 2017. When I say this year, I'm talking about 2017, because we're still in the middle of filing taxes for 2017. This year, the standard deduction is $6,350. That doubles to 12,000 for 2018. All right, so we talk about that. So we clear up the personal exemption, we clear up the standard deduction. The next one related to the standard deduction is the itemized deduction. There are some confusions about this also. So let's try to just clear that up briefly. You have the standard deduction when you file your tax return. It's either you use one or the other, the itemized deduction or the standard deduction. If the standard deduction is greater than your itemized deduction, then all software, if once you put that information in, is going to override and it's going to use the amount that's more beneficial to you, where the standard deduction would be more beneficial if it's higher than the itemized deduction. So there's a little challenge here in parts of this, because we have done tax returns and someone will come in, say even a married couple. We have had a quite few of these questions even this year already so far, where because the standard deduction is $12,700 for a married couple, then someone will come in and they will bring their tithing statement or their offering statement from their church, and they may have contributed $3,000 or $4,000, whatever the amount is, and that's on their statement, and they provide that to us. And then when we send them the draft of their tax return, they don't see that amount, and they're like, yes, but what happened to the amount we gave you? Okay, let me clarify that, because we have to be doing a lot of clarification on that this year and previous year. So we're going to continue doing that. So if you have, say, $3,000 that you gave to your church, church, synagogue, whatever it is, you donate $3,000 and you get your donation statement, but your other itemized deductions, including the $3,000, only comes to $11,000, $12,000, because there's a standard deduction of $12,700. Then it doesn't count, because you're already getting a greater amount from the government. So why bother to itemize, because you're going to lose out on that. And I want to clear that up, because there's a lot of confusion regarding that. Charitable contribution is one of those contribution or one of those expense. It has to be itemized. And if your itemization does not reach the threshold, then it's better to take the standard deduction. Okay, so we have cleared up the main parts. There are some other things which can be a little bit more complex, where individually we can speak to each person on an individual basis if that concerns you. We want to talk about things that are general in nature. So reminding you, this is Hubert McIntosh, your CPA, a member of SOFA. We're in the studio at WAVS 1170, the heartbeat of the Caribbean. You can call us 954-792-1170, 954-792-1170. We're here to answer any of your questions, your concerns. All right. Thank you. Thank you again for joining us. So let's move forward. So now we are at March 11th. Yes, so today is March 11th, Sunday, March 11th. And we're basically in the middle of the tax season, depending on what you're filing. So what are we saying? The middle, because for personal taxes are due April 17th. April 17th. Corporate taxes, some corporate tax, S corporation and LLC partnerships. LLC are partnerships. There's no such thing as LLC in the tax code. That it's a partnership. It's taxed as a partnership. So partnership and S corporation are due on March 15th. Personal taxes and C corporation are due April 17th this year. What does all that mean when it say it's due? Okay. March 15th, the fact that the S Corp and the LLC, it's due March 15th. What is due is the tax filing. The tax filing is due March 15th. All right. But if you choose, you can extend the filing and you will get an automatic 6-month extension. Automatic 6-month extension to file. Please don't miss this part. To file. So you have an extension to file. Okay. But then you come to April 17. What happens April 17? April 17th is the day we're going to talk about money. Every entity or individual who's going to owe the IRS, and you're going to file an extension on April 17, or you may have filed an extension on March 15th. If there was a tax liability when you filed March 15th, that tax liability has to be satisfied by April 17th. So even though it's an extension to file for 6 months, the extension, and a lot of people get this, so I'm hoping you're writing this down so you don't miss it. A lot of people are confusing this, thinking they're saying, well, I filed an extension. You told me it's a 6-month extension. That means I don't have to pay until March 15th. No, that's not true. That's not what I said. And if anybody has told you that, please double check your situation. If you have a potential tax liability, that money has to be paid April 17th. Please don't miss this. Yes, you have an extension for 6 months from March 15th, and you have a 5-month extension from April 17th to file, not to pay, guys. Oh my gosh. So many people are making this mistake and they're not paying. And then when they file the tax return, then they're hit with a 10, 20, sometimes 10, 20% underpayment tax. What does that mean? Let me break it down. If you should have paid $10,000 when you filed the extension, if you should have paid it by April 17th, if the liability would have been $10,000 and you did not pay that $10,000, when you file, even if you file on time, filing on time during the extension does not negate the fact that you owed that $10,000. So sometimes you're gonna hit with that 20%. It's called under-reporting penalty or failure to pay penalty of 20%. And then also along with that, you also have interest, because what they're saying, if you wait now 6 months and you should have paid that, then you're charged 6 months interest on that tax liability. So folks, I just want you to be careful of this, because a lot of times people are doing that and not realizing, because they hear, oh yes, you can file an extension. That is true. You can file an extension, but you don't have an extension to pay. Okay, so here's the question there. So here's a question on inquiring minds. But Hubert, what if I don't know what the tax liability should be? What if I don't know what the tax liability should be? Okay, All right? The IRS has given a formula. The IRS has given you a formula if you don't know. So saying you don't know is not an excuse. So the formula is 100 and whatever you owed last year. If you don't know what it should be this year, you must pay in 110%. Yes, 110% of what you paid last year. So if you paid $10,000 last year and you're saying you don't know what your tax liability is going to be this year, the IRS is saying to you, we don't care. We don't care that you don't know. You know what you paid last year. We want you to pay 110%. So if last year tax liability was $10,000, then 110% of this year's 110% for this year will be $11,000. That's 10,000 times 110% is 11,000. So the IRS is expecting a check of $11,000. Okay? All right. The other side now. So you may say now, okay, all right, I got them because this year my tax liability is going to be $20,000. So, if the law says 110% of last year, I know I'm going to owe 20,000. But since the law says 110% of last year, I'm just going to send in 11,000. No, the IRS says no, it don't work like that. It says 110% of last year, or that two-letter word, or 90% of what you expect to pay. So here's the thing. You expect to pay $20,000. The IRS is expecting that you send in 90% of that. So there's the formula. 110% of last year, or 90% of the expected amount if it's greater than last year. Now, it's not 90% of the expected amount for this year, okay? It's 110% of last year and 90% of the expected amount, not 90% if it's lower, okay? It's 90% if it's higher, okay? I think we have beaten that to death. I wanted to talk about that because so many people are making mistakes. So, quickly, March 15th, deadline for your LLC. If you have an LLC, tax as a partnership, that tax deadline is March 15th. You can get a 6 months extension. If you have an S corporation, a tax deadline is March 15th. You can get a 6 months extension. But for those two entities, whatever the expected liability is, it must be satisfied by April 17th, lest you're going to face penalties and interest. All right, we got the March 15th out the way. April 17th now, it's an extension. It's due for C Corp and individual. So yes, you'll get a 5-month extension. You'll get a 5-month extension. No, 5-month extension for the C Corp, 6 months extension for the personal. So I know that 5 months and 6 months can be confusing. So it's 5 months for the corporation, 6 months for the personal. But if there's a tax liability, it has to go in by April 17th. Okay? I think that's clear. We're in the studio. If that confused you any and you want us to clear that up anymore, give us a call. 954-792-1170. This is Hubert McIntosh, your CPA, a member of SOFA. SOFA, the Society of Financial Awareness, with one goal: to help eradicate financial illiteracy in America and around the world, one community at a time, and we are bringing it to this community. Thank you for joining us. All right, so let's move along. I'm gonna be talking about the topic. We're still in taxes, so I'm gonna interject a little tax planning with tax filing. Yes, I know you have heard me say tax planning is not done in the year of filing. Tax planning has to be done during the tax year. Yes, that statement is true. But here's what happened. The tax year 2017 is gone. We cannot do anything about the tax year 2017. Let me check that. One thing we can do. One thing. Only one thing we can do. If you have a self-employed business or you have a business, there's one more deduction we can possibly take. One deduction. And I'm going to leave that. I'm not going to bore you to death with that. If that is something, if you have a corporation or you're an independent contractor, there is one more deduction. Most people are telling you that there's nothing that you can do before March 15th. There's one thing you can do, okay? And I'm not going to bore the global audience with that. If that's your situation, call me up, hit me up personally, 754-366-7311, 754-366-7311, or email support@financialliteracy.info, support@financialliteracy.info. Or you can go on the website, financialliteracy.info, financialliteracy.info, and on the comment page, you can make a comment. You can reach out to us and request, and then we'll get back to you on that. So here's that situation. If you are an independent contractor where you get a 1099, or you have a little small business, there's still one deduction you can take. If your taxes look like they're too high and you don't want to pay that tax, there's still one deduction you can take. But it's only for the independent contractor or the small business owner. No, there's no other deduction you can take if you're a W-2 wage earner. Okay, so I just want to point that out. So reach us. You can also text me. Remember, you can text me also, 754-366-7311, 754-366-7311. Oh my gosh, I remind you, every Sunday, the fastest hour of the week, I tell you, is Sunday nights 9 to 10. Sunday nights 9 to 10, fastest hour of the week. We are already halfway. But I got some little gems I'm going to talk to you on the other side. So stick and stay. Let us take a short commercial break and go pay some bills. We will be right back. Welcome back. Welcome back. Thank you for sticking and staying. Thank you very much. Oh my gosh, we are halfway through. Okay, so I think we have cleared up the filing deadlines and what's due, payment and stuff like that. So, and we have given you some summary of regarding the new tax law changes. If there are other things that concerns you that we have not spoken about, you can hit us off the air and we can deal with your situation on a one-on-one basis. Because remember, as I said to you, what we're doing, we're helping you to develop a personal economic model. personal economic model. So, because each situation is different, what's good for your neighbor is not necessarily good for you, and what's good for you it may be different from your neighbor. Because remember two of the things we are talking about in any time you're doing with anything related to financial planning. Here are the two challenges that we all deal with. Every one of us. This is not, no one is exclusive of this. Every one of us, we have two situations we are dealing with. Do I want to live utmost or ultimate or just for my current lifestyle? Because we're all wrestling with two lifestyles, right? Current lifestyle and future lifestyle. And sometimes, it's one of those things we look at which says, but why? Why do we have to deal with that? It's just life. It's just life. Because we can say today that there's this common saying, man, I only live once. I'm just going to live it up. Yeah, that's a saying. If you want to make that saying, yes, you can make it that you only live once, you're going to live it up. But ask yourself, ask yourself, look in that mirror and ask yourself if that's a wise statement. Only you can answer that. I can't tell you that it's not a wise statement. I may have an opinion whether it's wise or unwise, but for you to decide that, each person has to decide that, because we're challenged every day with comparing our current lifestyle and our future lifestyle. Because keep in mind, whatever your choice is, one lifestyle is going to take some things from another lifestyle. Your current lifestyle can take something from your future lifestyle, and your future lifestyle can take something from your current lifestyle. So the key part there is to identify a balance. How do I balance it where I don't sacrifice? And when I say don't sacrifice, I mean sacrifice negatively, because you can have sacrifice and the sacrifices are positive. All sacrifices are not negative in the sense like, okay, here's an example, and going to the gym, we talk about that. Going to the gym, yes, you're going to go to the gym. You may get up a little bit earlier and you go to the gym and you're going to spend an hour at the gym. Yes, you sacrifice some sleep, but because you sacrifice some sleep, it doesn't mean that it's a bad thing, because the benefit of going to the gym for that 1 hour sometimes going to far outweigh the sacrifice of that extra sleep. So it's just the same thing with your current lifestyle and your future lifestyle. And in this particular case, we're talking about finance. So what are you putting away for your future versus living for your current lifestyle? And that's a challenge for each and every one of us has that challenge. And it's just to identify that medium or that balance. And a lot of times you can only do that with seeking professional advice. Sometimes people want to go it alone, and because they think they know this or know that. But you also have to remember is that there's a saying that I've used with you, I've shared with you over and over. If what you thought to be true turn out not to be true, when would you want to know? And it's a question each of us has to answer, because none of us knows everything. None of us knows everything. I'm here sharing financial education with you. Every day I am learning more and more. Every day I'm learning more. Anytime I reach where I think I know enough, then wow, wouldn't that be so sad for me? So with that being said, we are in the studio, 954-792-1170, 954-792-1170. All right. So here's a topic. It's a very common discussion that's going on this time of the year. We are at March 11th. Some people have filed their taxes. Some are getting ready to file their taxes. And one of the number one thing that people ask when they're filing their taxes, how much am I getting back? I picked up a lady. I went to visit a lady the other day. She's gonna laugh. I know she's on the radio. She's gonna laugh. So this lady is on Social Security, okay? And she has a side job. So she's earning some money. But she's earning the money as a independent contractor. She gets a 1099. And so she asked me when I picked up the paperwork, she says, "Do you think I'm going to get a refund?" And I stopped and I looked at her. I said, why do you think you would get a refund? She said, "I'm just asking." I said, a refund, you can only get a refund if you paid. It's surprising to me how many times I'll hear people say they want a refund, or their friend got a $5,000 refund and they're saying they would like that refund. And you ask the question, and how much did you pay in? And they says, "Oh, would I know?" I says, "Look at your W-2." And they'll look at the W and they says, "Well, I paid in $3,000. So it says, let's break this down. If you paid in $3,000, how do you expect to get $5,000? And this is one other thing out there where people are expecting to get a refund when they did not pay that in. Okay, I know there's an exception. We're going to get to that exception. But let me just deal with the people. Hold on. We're going to get to that exception. But let me just deal with the people who don't have any children first, okay? Yes, mom and dad, I know you're coming at me, okay? But let me deal with the people who don't have any children first. If you don't have any children and you did not pay, you're not going to get more than you paid in. All right. So the exception we're talking about is earned income credit, where you can have a parent. And I'm going to use parent. I'm not going to use parents. And why am I going to use parent? Because if you have a parent and that person makes under $40,000 and they have children that they're claiming, it's a possibility that they can get some earned income credit if their income is under $40,000. Okay? So why I said I'm going to use parent? Because here's the truth of the matter. Even though it exists, if it's parents, that means it's mom and dad. If mom and dad together with children and their total income is under 40,000, that is a challenge. Is it possible? Yes, it's possible, but that's a challenge with that. That's a different class. That's not the class we're talking about tonight. So we're talking about the refund. So basically, your refund, you're going to get a refund. You're getting back some of what you paid. So to move along with the topic, so what am I saying? I hear the discussion. The discussion is so common. Wow, man, I got back 5,000. I got back 6,000. Another person, oh my gosh, I got to get a better tax. I got to get a better tax accountant because last year I got back 6,000. This year I only got back 3,000. Man, that guy didn't do something. I need to get back 6,000. And there's this conversation going on and on and on. All right. I'm going to make a bold statement right now. If you filed your tax return, whether you're single, whether you're married, whether you're head of household, and you get back more than $5,000 for your tax refund, more than $5,000. So here's my statement right now. And I know, yes, the phone is going to ring because some of you are going to disagree with me. If you're getting back $5,000 or more for your tax refund, you have a bad accountant, a bad tax preparer, or a bad financial planner. Yes, I said it. I don't know your planner. I don't know your tax preparer. I don't know your CPA. But if you are getting back more than $5,000 as a refund, something is wrong. Why? Why is it wrong? You're telling me that you have given somebody $5,000. Yes, that's why we're using five. You have given somebody $5,000 to keep for you for 1 year. For 1 year. And you're not getting any interest. Stop and think about that for a minute. You have given somebody $5,000 and you're not getting any interest. So let me ask you, because most of us as a banker, let's talk about the people now who have a bank account. Okay, if you don't have a bank account, this question is not for you. I'm talking to the people with a bank account. Let me ask you a question. When you go to your bank, is it possible that you could get a loan for $5,000 and it's no interest? You can get a no interest loan no interest loan. You can get $5,000 to borrow, and you don't pay any interest. Well, let me tell you, if you have a bank that's giving those loans and you're not paying any interest, call me, let me know so that we broadcast this so that all of us can give this bank some business. Because if there is such a bank, every one of us under the sound of my voice right now would be willing to give that bank some business. If you have that bank that is gonna give you $5,000 and you don't pay any interest, you let us know so that we can all join that bank. Okay. All right. I'm not hearing any noise, so I'm guessing that there's no such a bank. All right. So let me ask you this then now. We're doing a fireside chat. We're sitting at the fireside chatting right now. This is what we're doing. So if you don't know a bank that can give you $5,000 and you don't pay any interest, why is it that you're having the IRS keep your money for 1 year with no interest? The IRS doesn't give you interest. When the IRS sends a refund check, that refund check does not have any interest. So if any of you are fooled or bamboozled or hoodwinked to think that your refund check includes interest, oh my gosh. Wow. Man, you have been hoodwinked. Your refund does not come with interest. It's a straight refund. All right. Okay. I hear it out there. Oh, yeah, but I had this friend and he got some interest once. Okay. All right. You got me there. All right. If the IRS makes a mistake, and you were to get 5,000, all right, let's say 10,000. If you were to get 10,000 and you only got 5, and then your CPA or your tax professional challenges the IRS and then you win the case and the IRS says, okay, you're right, we should have sent you 10,000, but we only sent you 5. Okay, all right. Will they give you that extra 5? With interest. So if it takes 6 months, they will give it to you and they'll give you the interest for that. Okay? All right, remember, we are in the studio. I don't know if I'm shocking you guys too much, but you're not calling with your comments and your feedback. I know you're there. I know you're listening. We're in the studio, 954 792-1170. 954-792-1170. Okay. So here's one of the common objection I get when someone says, well, we let the IRS keep it because it's safe with them. Oh my gosh. I cannot tell you how often I have heard that. We let the IRS keep it because it's safe with them. Oh my gosh. Well, that alone, that philosophy, that needs some education. And so we're not even going to dive into it on this program. Another one I hear is, well, we do it because when we get the tax refund, we can pay off some bills. Oh my gosh. I cannot tell you how often I've heard this one. But I'm just going to touch on this a little bit. We're not going to go too deep dive in it. But let's talk about that person who says, when I get the refund, I can pay off some bills. Folks, let's break this down. We're going to use the 5,000, right? So basically, if you're going to get a refund of $5,000, so if we divide 5,000 by, let's say 15. Let's not use 12, because say you're going to file a tax return in March, you're going to get the 5,000 in March. So let's say 15 months. So let's be nice and say 15 months. And let's divide that 5,000 by 15 months. So that works out to be what? For you mathematicians out there, that's what? 300 and something dollars, right? 300 and something dollars, because 300 times 15, that's 4,500. One time my math used to be sharper, especially when I was in high school. My math was sharper, but as you get older, you get used to using calculator and computer. You don't calculate that much in your head now. So it's 300 and something dollars. So basically you're letting the IRS keep $300 per month so that you can pay off some bills when you get the refund. But let's look at this other way. What if you had guidance where that $300, you could have been using that $300, those same bills that was accumulated with interest. So interest is being accrued on it. If you were taking care of some of those bills, then what you have done, you would have minimized some of those bills, because the interest would not have been added onto it. So you may be thinking, and you're like, but Hubert, you said we are talking about tax filing. What does this have to do? You got to remember, even though you're filing your taxes now, you're filing your taxes for 2017. But dear, you're in March 11, 2018. We still have 9.5 months. Is that math right? Yeah, we still have 9.5 months. 9.5 months to plan for 2018. So ask yourself, are you going to do the same thing for 2017 that you did in 2017? You see what you're doing wrong. You see that you could do something different. Now is the time to take a look at it. Whereas you may need, and you may say, but how do we do it? Listen, contact a professional. You can even Google. You can even contact professional Google. Google is a great accountant. You have many resources. You're not short of resources. You can go on Google. You can reach out to a professional I'm yes, and let me a point. I'm remindful of a point. A listener called me last week, and they asked, you mentioned, and we would like you to take care of some things for us, but we are not sure what it will cost. So sometimes we don't call because we're not sure. Let me clear, and I thankful listener, I thank you for pointing that out, because I have been neglectful in pointing that out to you. I mentioned that there are many professionals, including myself, but I never spoke about fees. This is an educational program. We're educating you here, but there are certain circumstances that you may need a professional to guide you because of your situation. What we do in our office, yes, you're not gonna believe this. Our initial consultation is 100% complimentary. There are no fees. There are no fees because it's a part of us being family. It's a part of bringing financial education to you. Whereas if you have something on your mind, you don't have to hesitate in calling us. Our initial consultation is free. Okay? All right, so let me be clear. So we meet with you, or you meet with us, and you spend an hour. We spend an hour talking about your situation. And your situation is of such that, wow, we may have to represent you before the IRS. It may take 10, 15, 20 hours. Because representing you before the IRS, you never know how long it's going to take. Obviously, we cannot do that for free. Okay? So I just want to point that out. We cannot do that for free, but you can get an initial consultation with us for free as part of your educational program. So we can guide you, we can look at your situation, and we can give you insights, okay? So I wanted to address that. So we're in the studio, got a couple of minutes to go. So we can still take your call, 954-792-1170, 954-792-1170. And remember, you can find us on the web, financialliteracy.info, financialliteracy.info. On there also, we have media pages. We have a Twitter page. If you tweet us, we'll tweet you back. Yes. You can go on Facebook. You can like our page. You can message us. If you message us, we're going to message you back. Yeah, we have yes. Yeah, we're a little bit sophisticated there. So we have a Facebook page. And also on the web, we have a YouTube page. Yes, we have a YouTube page. And what I would recommend when you go on the website, financialliteracy.info, I'd recommend that you subscribe to the page. The subscription is free. It doesn't cost you anything. But why would you subscribe to the YouTube page? Because anytime there are any changes on the YouTube, whether if we add a new post, subscribers will be notified that, financial literacy have just added another page or a post or something. Remember, every show that we have done since January 1, 2017 has been recorded and it's on the page. Yes. So even though you may miss something, there's a topic you may have missed, you can go on our YouTube page and you can find that topic. Yes. We have spoken about college planning. We have spoken about mortgages, first-time home buyers, long-term care, Social Security, Medicare. We have touched so many topics in the financial arena that you can go on there and the topics are there. The topics are there that you can listen to. So go ahead and check it out. go ahead and check it out. So you never know. We have a caller. We just have a few seconds, so we're gonna take this. Okay, the caller is going to leave the information. All right, no problem. We got you. All right, this is Hubert McIntosh, your CPA, a member of SOFA, the Society for Financial Awareness, with one mission to help eradicate financial illiteracy in America, one community at a time. We're here with you on WAVS 1170, the Heartbeat of the Caribbean, Sunday nights, 9 to 10, but you have 24/7 access to us. Call us, 754-366-7311, 754-366-7311, and visit us, financialliteracy.info. Oh, thank you for joining us. Have a good evening, and we will see you next week.
Waves 1170 has come to an end. Don't be mad.
He'll be back next week
On
www.waves1170.com.
Hubert McIntosh is a member of the Society for Financial Awareness, www.sofausa.org.
Promotional consideration provided by
LifelineTax.com, the Remap Accounting Firm, the Wealth Management and Distribution Group, and the McIntosh Insurance Agency.
Financial Literacy on Waves 1170 AM
Is a digital media production by Hubert McIntosh.
WAVS 1170 AM, Davie, Fort Lauderdale, Miami. Simulcasting on 107.9